Morning, Market Chameleons and Dimitri Pargamanik. How you doing, D?
Good morning, Will. How are you?
Awesome. Great show last night, huh?
Yep. Yep.
Fe-
Felix always brings it with the unusual option volume.
Yeah, he's an interesting cat. All right, before we get started, why don't we get to the disclaimer?
Okay. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to provide you with guidance, help answer your questions. So if you need help, call your broker. There's the disclaimer, everyone.
There you go. What are you seeing this morning, buddy?
Take a look real quick. Start out with the pre-market report. I also want to touch upon short interest, shorting stock. I'm getting a lot of questions about that, so I wanted to cover that a little bit. We'll take a look at what's coming up on the earnings front, and if you have any questions along the way, Will, let me know. I'll try to answer as many questions as I can, and if we still have time, I'll take a look at bullish and bearish ideas. So let's start now with the pre-market report, and these are stocks actively trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. First, let's see what's going on in the higher market cap stocks. So I'm using this filter market cap, stocks $20 billion or higher. So I see GE popped up on the top of the list, and I believe that one just reported earnings. So let's just take a look at what's going on with GE. And I know we talked about it before, there's a lot of open interest on those 10 strike. I think it was the 10 strike and maybe the strike right above it, the 11 and 12. But let's take a look at its earnings history, because that's what it's moving on, up 9.5% pre-market hours. So this is the distribution of returns around earnings. So we see here, day of earnings, opening gap. These are the historical earnings here, the dates. Last one, October 28th, going back 12 quarters. So here are the historical opening gaps. So we see it tended to open up, gap up more often than down. 75% of the time it gapped higher, 25% lower, on average 3.3%. The average gap up or down historically was 4.4%, with a high move of 9.2%, which was over here January 31st, which is like right today. It's even a little bit higher if it opens up here, up 9.5%. So this is what it tended to do after the opening. From the opening price to the high of the day, average move was up 3.3%. From the open to the low of the day, average move was down 3.6%. From the open to the close of the day, it tended to drift lower more often than higher. 75% of the time, it closed lower than the opening price, 25% higher, for an average loss of 1.5%. It looks like coming out of earnings, it tended to be weaker. So I'm looking at, 1 day, 2 day, 3 day, up to 2 weeks, you're lost anywhere between 1 to 1.8% historically. So that's really quickly price return distribution around GE after reporting earnings. And of course, you still want to take a look at the news, see what's going on, and factor that into your analysis. I'm not going to get into right now interpreting that, just to cover, or looking at that press release, just to cover more stuff today. But that's a real quick look at GE after reporting earnings. I'm going to take a look now at the unfiltered report and see what's popping up there. So we got a couple stocks up top. EDSA up 77% on 3.4 million shares. KOSS up 75% on 2.2 million shares. Another one sticks out from yesterday, GME up 16% on 1.5 million shares. And I think what's going on here is, and I'm not sure about, you kind of brought this to my attention, that there are people in chat rooms, on message boards, or places like Reddit, who are looking for short squeezes, right? Well, like they're looking for stocks with low float, potential short squeeze, and then is that correct?
Yeah,
Like
they promote going after the hedge funds who are short. They name names and they're like, let's buy this stock and put these guys out of business. Actually, interestingly enough, there's an article in the journal today about one of the hedge funds, and it needed more liquidity. Citadel put in $2 billion, and they're the biggest short in GME. So,
oh, really?
yeah, so
Okay.
it's being talked about, on CNBC, whatever. But Wall Street Bets is the big site on Reddit. It's got over
That,
2 million people who are involved. So it's interesting.
and it's questionable if that's even legal, right? You raised the
Well,
question: is this
yeah,
something that?
there is supposedly some SEC rules about people getting together and doing this type of thing is not,
Right.
may
Yeah, you
not be
can't
legal.
create like some kind of
Yeah.
consortium of people who want to try to push the stock one way or the other to drive other people in, or like a pump and dump. So, like, obviously, we don't advocate that kind of trading, and the only reason, it's interesting, it's in the news, but then there are people looking for and asking questions about short squeezes and short interest. So I'm just going to kind of cover that part a little bit to answer some questions about shorting stock, hard to borrow, potentially short squeezes. But again, like, we'll see GME kind of pop up on one of those lists. But we just wanted to bring that up, that activity on Reddit, whatever they're doing. I don't know what they're doing, but like Will said, that the SEC might be even looking into what they're doing. But here's the question I get sometimes: Do you have a list of stocks with short interest? Okay, and let me show you right now this list of stock of short interest, and I went to the Nasdaq because they have this short interest, and here's today's January 26th, right? We're on January 26th. I brought up AMD. So here's their latest short interest, in AMD, and this is probably for any stock. They update it, twice a month. It's based on the settled trades on December 31st. Okay, so this is December 31st settled trades. They're showing you short interest. We're in January 26th. This could be, if you're basing your information on that, you're way late, right? And you could see they only reported twice a month, and I think when they reported, it's already 2 weeks old. So they don't report it the day after. They still wait 2 weeks. So you're not getting this real time, reliable information. This could have been the next business day, all gone. Okay, so when you're looking at these short interests and you're basing your any decisions on this, you're talking about very old data that's based on one day's, settled trades. I don't know how good that is. So I guess the question is, can we find something more real time, a little bit better indicator in real time about the potential, float out there that's short? Okay, that's the question. And there are two other indicators. Now, when we talk about shorting stock, people have to understand, to short a stock, right? If you're going to short a stock, you have to find somebody who's long the stock to borrow it from them before you short it, right? So if I want to short a stock, and let's say Will has 1,000 shares of some stock XYZ, and I want to short 1,000 shares, I have to go to Will and say, can I borrow your shares? Because I'm going to borrow your long shares. I'm going to sell them with the promise I'm going to give you your shares back whenever you need them. Okay, that's the only way you could short it. You can't just short naked. You have to borrow the shares from somebody.
And
okay?
I'm not going to give them to you for free, buddy. You got to pay me a little
And
something.
Will's not going to give them to me for free, so there's a fee. So I have to pay Will some kind of fee. Now, if there's a lot of stock out there to short, usually the fee is almost non-existent. It's very small. You're not going to even notice it, especially when if the broker is holding it in-house already. let you short it. But
well, a lot of the brokers actually force you to be able to lend your shares. Like that's part of the agreement to open a brokerage account.
Right. So when you're buying shares, they're held in street name. So the broker is already controlling your shares. You're kind of borrowing it, on mark. They're holding your shares in street name so they can lend out your stock. You don't even they don't ask you for permission. They could lend out your stock. But keep in mind that to short, it's very important to be able to short by regulation. You have to what they call a locate. A locate is you borrowed the shares from somebody and you have to tell the regulators to locate where you got those shares from. Otherwise, it's an illegal short. Okay, now there are some market making exceptions when you have 3 days to locate them, whatever, but it's still, that's the rule. So keep that in mind. And now let's take a look at some other reports here. Now there is a report, and this one comes out every day, right? Now I'm going to show it to you here. And this one is called the threshold list. So what is the threshold? Now I'm going to show you, these are stocks on the threshold list. The threshold list, and we could read about it over here. This is a report every day comes out, and it's stocks that we call fail to deliver. Okay, so fail to deliver means that your bank or whatever allowed a certain amount of people to short the stock. Well, they have to be able to locate the stock, and prove that they borrowed it from somebody long. And they have a couple days to do that. But if they fail to deliver for 5 consecutive days, so you see here, if they fail to deliver for 5 consecutive days, and it's 10,000 shares or more, so wherever, like say, you're a big bank or whatever, fails to deliver for 5 consecutive days or more, 10,000 shares or more, okay, or it's equal to 0.5% of the outstanding shares, this stock goes on the threshold list, meaning you can't really short it. You have to find, you have to prove that you could locate that stock. And usually what it means is that if it's on the threshold list and you fail to deliver for that long, then you have to buy back, right? That's it. You can't find it. You can't prove that you located the stock. You're forced to buy back, or you're going to be in violation. You're going to get fines. So that's a threshold list. And let's just take a look at this, what this looks like. Oops. Let's come back to the threshold list. And one of the things is that I think Tesla was on that threshold list for a long time, right? And what happens is one broker will fail to deliver, they'll cover, but a different broker sells it short. But
it's interesting because you look at the SEC rules, right? I don't know if you remember when he was being heavily shorted by some major investment firms. When I say he, I mean Musk. He publicly commented, "Let's go after these shorts." Like he and the SEC came down on him. Remember,
right?
He was using his bullhorn to promote buying his stock and going after the shorts.
Right. And I remember they were on a threshold list. It was hard to borrow. So that's where the term "hard to borrow" is. So if I could borrow somebody's stock with no problem, I could short it. But if I can't find somebody to lend me the stock to short, then it becomes hard to borrow. It's not easy. It's hard to borrow. And when it's hard to borrow, usually you have to incentivize somebody to lend you their stock, which is pay them a fee. Okay, now the brokerage firm, remember, they're holding it in street name. They usually don't split that fee with you. They keep that fee, right? But to incentivize them, you have the markets, it's like any market, supply and demand. You'll see that there's a hard to borrow fee to short that stock. When we talk about the threshold list, now there are 2 things coming up. Sometimes if the float is very small, right? If the float is very small, so you could see here, I'm gonna show you over here. These are there's not a lot of outstanding shares. Floats are small. These could be very low market cap stocks. It just might, it's not because so many people are shorting, it's just not really available to borrow, right? There, the stock could be held somewhere where you can't really borrow it from this brokerage firm. They don't make it available to you. So it'll be hard to borrow even without a lot of people shorting it. Okay, it'll still make that threshold list. And you could see here some of these ETFs, right? These ETFs, you can't short them because they have a small float out there. You can't borrow it from anybody, and they'll be on that threshold list. Other times there'll be some stocks, or it could be very heavily shorted stock where there's no more to borrow. People are failing to deliver. And the one thing with failed to deliver is you will be forced to buy back that stock if you can't locate it. It doesn't matter if you could sustain losses going up. You will be forced to buy back that stock if you fail to deliver.
And that may have happened yesterday, right? That may have been part of it.
It's possible, right? By the way, when I say you're forced, they don't call you up and say buy back the stock. You're gonna get up in the morning and you see your broker bought back that stock. You bought the stock. That's it. You're not gonna even get an indicator. Can you buy that stock, please? They just buy back. They buy back and tell you here's your execution. Now, another thing, let's just take a look at here. And this is the interesting one thing is I'm seeing that this is the number of stocks that are appearing on the short list. So we see that the threshold list, it's increasing. So right now we're like 85 stocks right now on the threshold list compared to a 90-day average of 59. So we are seeing this increasing right now. Here, I'm going to show you the performance. And this is interesting too, because a lot of times when stocks are getting shorted, it's for a reason. They might be doing bad, right? That's why the shorts come in. But this is interesting. The last 2 weeks, I just sorted it, how many are up, how many are down in just the 1 week period. And way more are now on the upside. There might be people just covering, but you're seeing here that the percentage gains, I got like 3 pages of percentage gains, one with decliners. Let me just see like 1 month. So you could see here 1 month returns here. Then the other thing what we're looking at here is the number of days it's on that list. So this is the number of consecutive days on the list. So this one's been 13 consecutive days on the fail to deliver threshold list. This one's been 32 days, 27, right? So they're kind of like somehow resetting it, from broker to broker, but there's fails to deliver. You see lots of consecutive days. In the last month, we measure how many days in the last month, what percentage of the days in the last month it's been on the threshold list, and in the last 6 months. So you can see here in last month, this stock here, GameStop, GME. So here we go, there's the GME that was up. In the last month, every day, it's made the threshold list. It's been on the fail to deliver every day, right? Same thing here with the ATOS. Here's a couple other ones. So it never stopped being on the fail to deliver. I'm not sure how it's happening, but it's probably, one broker covers, then the other broker, then there's another broker that resets, but somehow it's been on that threshold list every day, meaning it's almost impossible to short. And the thing with when you cannot short a stock, it's not just a short squeeze where people might be buying it back because they're forced to buy back or they want to cover their losses. But when a stock is climbing and you cannot short it, the price discovery is skewed, right? Because even if you think that there are traders out there that it's too high, it's not possible for them to borrow the stock and short it. So it can just get inflated that way as well. So the price discovery mechanism is going to be a little bit distorted. So that's really quickly. I just wanted to show you the short, the threshold list, explain to you what is going on with this list, kind of, ways to look at a more real-time indicator where there might be a difficulty to borrow stock and short. Another indicator here is we could look at the options market. So remember when we were talking about shorting a stock, well, to short a stock, if we have to borrow this stock and we can't, and we have to pay a higher fee, well, that will be reflected in the options market as well, because we could synthetically short a stock, right? And if we could synthetically short a stock and not pay any fee, it would be an arbitrage, right? Because why would I go short a, go into the lending, hard lending market and pay a fee if I could just do it for free synthetically in the options market? So the options market will start reflecting that fee as well. And here's that list over here. So we could go here, under screeners. Hold on one second. Here's the synthetic long discounts. And what this is letting us know is if I synthetically got long, right? If I synthetically got long these stocks, these are a list of stocks. This is the expiration, okay? And it's looking at the money. So if I synthetically got long APHA July 16th, well, I'm getting a 1.5% discount to the spot price. Okay, if I just did it on the markets, I'm getting a 1.5% discount on the spot price. In other words, the stock is $11.80, but if I buy the call and sell the put on at the money, synthetically I'm buying it for $11.32. That means I'm getting a discount. Well, that means the person shorting it, doing the other side, is paying me a fee of 1.5% to get this to go short. Okay, so synthetically you could see that's the fee that they're giving you here, almost 50 cents. They're saying even though the stock's $11.80 and I need to get it short, I'm going to pay an extra 50 cents, about 48 cents to get it to establish a short position.
Which in theory may be less than it costs to borrow to be short the stock in the marketplace.
It might be. You would think though that it would be very close to it, because otherwise you'd start creating an arbitrage.
It's an arbitrage, yeah.
Right. So you would start creating an arbitrage opportunity. So it should be relatively close to the stock loan market. Okay. And let's take a look at GME, because that one we just talked about it. So let's take a look at that. So here's GME. So we see here, these are the different, okay, so sorry, these are not all at the money. These are in the expiration, different strikes. So here's GME July 16th. This one has 172 days to go, and it's looking at the 115 strike. If you did the synthetic on the 115 strike, the stock closed 73.95. We're not open yet. This is yesterday's closing prices, 73.95. Synthetically, you would be able to create a long for $66. So you could see that's a 4.5% discount to the stock price. Right? Does that make sense to everybody? Sorry. This is a synthetic bid. I'm sorry. This is the synthetic bid. This is the synthetic offer, $73.95. My mistake. The stock closed at $77.41, because I was looking, that math is not right. The stock closed at $77.41. Synthetically, if I wanted to get long on the market, not the midpoint, this is the market, on the market, it would cost $73.95. Okay, so that's a 4.5% discount to the market. If I did it the other way, it'd be $66. So synthetically, I could get long for a discount. Does that make sense to everybody? So what I said earlier, I wasn't looking at this is the closing price, and this is the market in the synthetics. Okay, so the market in the synthetics is like $66 bid, $73.95 offer. The stock is $77.41. Okay, so this would be your discount. Again, that's where it's hard to borrow, because I can't borrow the stock to short it. I can synthetically create a short, but this, and this is where you're seeing those discounts appear. Hopefully what I was saying here makes sense. I can move on. Will, let me know if you have questions.
Yeah, no, people are good.
Okay. Let's take a look at the upcoming earnings. And remember, these are real time. These are coming from the options markets in real time. So this is reflective, of what's going on in the options market. You know, obviously we have 15-minute delayed quotes, but the options market are reflecting real time. Let's take a look at earnings that are coming up in the next 2 weeks. I'm going to filter out by option contracts, 5,000 contracts or more. So let's see what's coming up. These report in the morning. So we see here TXN, that's expected to report today after the market close. The straddle's implying a move of 5% in either direction. That compares to a 4-quarter average move of 2.7% and a 12-quarter average move of 4.7%. So we're 2.4% above that 4-quarter average, in line with the 12-quarter average. The high move on that stock, 8.5% in the last 12 quarters. Microsoft, that is expected today after the market close. The straddle's implying a move of 4.6% in either direction. That compares to a 4-quarter average move of 3.3%, a 12-quarter average move of 2.5%, with a high move of 5.8% in the last 12 quarters. Got 3 more coming up today after the market close. AMD, that's expecting also today after market close. Straddle's implying a move of 8.2%. That compares to a 4-quarter average move of 6.5% and a 12-quarter average move of 9.1%. So we're 1.8% above the 4-quarter average, almost 1% below the 12-quarter average. High move on that, 19.9% in the last 12 quarters. COF, that straddle's implying a move of 5.1% compared to a 4-quarter average move of 3.7 and a 12-quarter average move of 3.4. So we're about 1.5% above each of those 4-quarter average and 12-quarter average. High move on that is 6.7% in the last 12 quarters. Last one, Starbucks, coming up today after the market close. Straddle's implying a move of 4.3%. That's compared to 2.4% in the last 4 quarters, 12% in the 3.3% in the last 12 quarters. So 1.8% above the 4-quarter average, 0.9% above the 12-quarter average. High move on that, 9.7% in the last 12 quarters. Will, do you have any questions?
Well, someone was asking about when you were on Microsoft is, I guess there's option strategies detected. They wondered if you could look deeper into Microsoft.
Okay. So we'll take a look at Microsoft's history and how it tended to perform around earnings. So this is a chart of what the options market expected the stock to move after reporting earnings versus actual moves. So the bar here, I'm going to hover over it. You can see October 27th after market close, Microsoft was down 5% after reporting earnings. That bar is telling us what the straddle was implying. So up or down 4.5%. That's why you're seeing it in both directions. So you see the move was a little bit higher than the expected. So if you sold that straddle, you would have had to buy back for higher. You would be losing money. If you bought that straddle, it would have been profitable on that day. The green, that's telling you the price reaction, but to the upside. So January 29th, Microsoft reported earnings 2020. Stock was up 2.8%. The straddle was implying a move of 3.3% in either direction. So let's see what the statistics for the last 12 quarters. So we see here that the options overestimated the move 92% of the time. On average, the straddle was implying a move of 4.3% in either direction versus the average realized move of 2.5%. So you could see there about 1.8% differential between the implied and realized move. Implied vol crush, here we see that we're looking at the 30-day constant maturity option. So an option that expires 30 days out. It has more vega. We're not looking at the very near-term option. So on average, the day after reporting earnings, the implied volatility was down 21%. So day before reporting earnings, average IV for that 30-day constant maturity, 29.8. Day after, the average implied volatility, 23.8. 5 days later, kind of stayed the same, 23.3. So that's the implied vol crush in Microsoft after reporting earnings. We're right up against the bell, 9:30, Will. So I guess
Awesome job, Dima. Chameleons, thanks for joining. All the chat in the YouTube on YouTube was great today. Always, D, great job.
Thanks, Will. Thanks, everyone. Have a safe day. Stay safe. Have a